Well, we're heading deeper into what I call the Greater Depression, a period of time when most people's standard of living drops significantly. And I don't use the word depression promiscuously, but purposefully. It's going to be like what happened from 1929 to 1946, but much worse, much longer lasting, and much different. Politically, in the U.S., I think the U.S. government is actually on tilt. That's a term that comes out of poker. I like to play poker. And sometimes you see a player who's been making mistakes and losing money. And then after a while, he relinquishes all hope and just goes wild and hope that crazy bets will make him even. And that's where the U.S. government is at this point, spending $2 trillion per year, more than it takes in. That's going to go to 3 or 4 trillion in the next couple of years. But they're completely out of control.
Entering a greater depression that will be worse than the economic downturn of 1929 to 1946. He believes the U.S. government is out of control, spending trillions more than it earns, leading to huge deficits. He also highlights social issues like immigration and unsustainable military spending. Casey predicts that the U.S. dollar, overprinted and devalued, will lose its global dominance, causing foreign investors to dump dollars and buy American assets. Casey sees gold as a safe investment because it holds value independently. He also views silver and mining stocks as good speculative investments, but warns that mining is a tough industry. He is critical of bonds, real estate, and the stock market, all of which he sees as risky right now. While some commodities are still cheap, he advises against futures trading for those without deep experience.
The government itself is run by actual Jacobins, the same kind of people that took over France after the revolution. Militarily, we're in an unsustainable position with 800 bases around the world, gigantic military expenditures on last generation weapon systems that are pointless in today's world, just expensive, bankrupting us. And sociologically, the country is falling apart at the seams, not least of which the problems we have is the migration of millions and millions of aliens to the U.S. People without money that don't share American values, and stupidly, incredibly, the U.S. is inviting them in, paying them, giving them money, giving them places to stay, free food, free medical care. And it's very destabilizing to the country as a whole and demoralizing to the average American when he sees this going on. Look at the fact that the acknowledged debt of the U.S. is $35 trillion. And of course, there's another $100 trillion of contingent debt of various types that's out there. And they recognize that it can never be repaid, or it can be repaid, but the dollars it's repaid with would be of nominal value. So that I think we're pretty close to game over, quite frankly. The major export of the U.S. for the last 40 years has not been soybeans or Boeings or IBMs or things of that nature. It's been dollars. We send dollars abroad, and the nice foreigners give us Mercedes and Sonys and cocaine and God knows what else. But at this point, the world is awash in dollars. And since foreigners, unlike Americans, don't have to use dollars to settle with each other, it's just a convenience because it's the most liquid currency. If they start dumping them, the question is, to whom? And the answer is, they'll all come back to the U.S. to take title to American land, businesses, whatever. So we'll get all those dollars back to the U.S., and title to the assets of America will be transferred to foreigners because the country's been living way above its means for decades now. Well, you've got to recognize that the U.S. government, or the Federal Reserve, is running these gigantic deficits, and they really can't borrow the money anymore. It's very hard to tax anymore. So they're printing money up. And all this additional purchasing media spewing out of the Federal Reserve floats into society, and that's what happens. If you double the money supply in the U.S., prices will approximately double. And that's what's going on right now. It's not doubling every year, obviously, but it's increasing rapidly. And in addition to the general price level going up, people that have assets are looking for some way that they can stay ahead on this treadmill. So even though the average American is not very familiar with gold, enough people in the US and around the world are, they realize that gold is the only financial asset that's not simultaneously somebody else's liability. It's money in its most basic form. And you can't hold dollars anymore. That's a guaranteed loss every year. So what are you going to hold if you want an asset that is insulated from the vagaries of unemployment and consumer purchasing and corporate machinations and so forth? But can you go into real estate? I mean, real estate is sitting on a sea of debt, very, very dangerous, being battered additionally by real estate taxes. And so where do you put your money today, quite frankly? It used to be, you think, well, America is going to grow. I'll put my money in a mutual fund, good corporations, they'll go up in value, grow with. It's been an excellent idea in the past. But corporations are overleveraged. The whole society is overleveraged. And it's basically just paper run by increasingly distant and corrupt managements. No, I think gold is going up because it represents safety and prudence and insurance. And at some point, it's going to go up a lot faster. After it reaches a certain point, people say, this is the place to be. And greed will hit it. And it can go a lot higher very quickly. Foreign central banks that hold lots and lots of dollars realize they don't want to hold the unsecured liability of a bankrupt government. They saw what happened to the Russians recently. So no, the dollar is an international hot potato from their point of view. So what kind of an asset will a central bank hold? Well, it's not so smart holding dollars. Don't want to hold the paper currency of any other government because most of the international governments are bankrupt. So they're going to do what people have done for thousands of years. They're going to buy gold because it was Aristotle in the 4th century BC that defined the reasons why gold is an ideal money. And they're actually just as valid now as they were 2,400 years ago. As far as money, what are you going to use for money? Any type of a commodity with certain characteristics can be used. I mentioned the parameters that Aristotle defined. He said a good money has to be durable. Silver is durable, not as durable as gold, but a lot more durable than wheat, for instance, which is why you can't use wheat as money. It has to be divisible. Silver is equally divisible as gold. That's why you can't use diamonds or artwork as money. It has to be convenient. That's why you can't use lead as money, because it takes way too much of it to be of use. And that's a bit of a problem with silver. If you're going to have a lot of wealth that you want to hold as money, it takes a lot of silver. It takes a room full of it, frankly. It's not the case with gold. Durable, divisible, convenient, consistent. That's why we can't use real estate as money. Every piece is different from any other piece. And it has to have use value in itself. That's why you shouldn't use paper as money. Silver's fine that way. Look, you can use copper as money, and we have used copper as money, frankly. From the days of ancient Greece and Rome to the present, copper's been used as small change. But gold just works out best. It's got more of the important characteristics of a sound money. Nothing wrong with silver. In fact, silver is an excellent speculation at this point. It's a much smaller market than gold. And there's almost all of the gold that's been mined throughout history. Nobody knows how much that is, but the guess is that 6 to 7 billion ounces are above ground. And they're basically in storage. People hold on to it. That's not the case with silver. There's not a large inventory of silver. So smaller market, no inventory, much lower per unit price. When people get scared, it can be very, very volatile. So as a speculation at this point, I think silver is pretty good. Mining stocks are perhaps the most volatile class of securities on the planet. They're probably more volatile than biotech stocks, more volatile than high-tech startups even, hugely volatile. And that scares people away from them. And mining is actually a crappy 19th century choo-choo train business. First of all, you have to go out and find a deposit, which is really hard to do, and it costs money. Then you have to develop it. Now you're talking about millions of dollars on an Easter egg hunt to develop the deposit. And then if it turns out that you've got a viable deposit to mine, now your trouble really starts. You've got to raise scores or hundreds of millions or billions of dollars to mine it. And now you're going to have to confront regulations and permits and NGOs and native people. And it's a horrible industry. So, of course, I understand why people stay away from it. That's why Buffett has famously never bought a mining stock. But on the bright side, the market caps of these things are so teeny weeny. I mean, you talk about big cap stocks, small cap stocks, micro cap stocks. These things are nano cap stocks, even pico cap. They're teeny weeny, which means that they're so small that institutions have trouble buying them. They can't buy things with market caps of a few $1 million or 10 or $20 million. They manage trillions. So that the institutions aren't buying them for that reason. They're not buying them because same reason that Buffett's not buying. They don't buy them because they don't believe in gold, quite frankly. They think it's a pet rock. And the public doesn't understand it. So it's a completely overlooked part of the market. But it's such a small part of the market. And when things start happening, which I expect, it takes years to happen sometimes before they start happening, these things explode. The whole market goes 10 to 1. Many individual stocks go 100 to 1. I've personally been involved in 2 companies that have gone 1,000 to 1. I'm not talking over a lifetime. I'm talking over a few years. So I think as a speculation right now, your broker will tell you that's insane. Everybody will say, what are you talking about? But that's one of the signs of a good speculation, that you're not running with the herd. I don't have any interest in the stock market as a whole at this point. From a historical point of view, the stock market as a whole is very overpriced. Price earnings ratio, price to book value ratio, low dividend yields. It's not a good time to be involved in stocks right now. And the possibility exists for the stock market to actually crash. It's not a prediction, but it's a real possibility. Well, should you be in bonds? And I would say no. Bonds are about the worst thing you could be in. They're a triple threat to your capital. You have the currency risk, the dollar, which is headed towards its intrinsic value. You have the interest rate risk. Interest rates are still very, very low from a recent historical point of view. People forget that they were 15, 18%. That's what the government was paying back in the early 80s. So that's another huge risk. And you've got the default risk, not with government paper. They'll just print up more dollars. But with corporates, yeah, there's a real default risk. So no, I wouldn't touch bonds at this point. Sometime in the future, they may be, once again, a good speculation. Real estate, lots of problems with real estate. At the moment, I'm a gold bug, a commodity bug. But it's not just gold. There's still some cheap commodities around. I mean, you've had cocoa, which has quadrupled in the last year. That's a big move for commodities. So your price of your candy bars is going to go way up. Coffee doubled in the last year. Copper doubled. Actually, the cheapest commodities right now at the moment are the grains. Soybeans, wheat, corn, rice. But that's only because we've had absolutely wonderful weather this season. And there are huge harvests. And they're quite cheap right now. So I'm looking to go long the grains. There are ETFs that are tradable as stocks for the grains. But if you want to speculate in the grains, you're really looking at futures markets. And of course, there are options on futures. But I don't recommend that people that are not really, really experienced get involved in the futures markets, because it's so easy to blow yourself up by over-leveraging or second guessing. And you have to realize that the big players in the futures markets have access to the best information of all types on these things. You're playing against, super sharks. Odds are against you. I'm just making that observation as an academic point. Commodities are generally cheap, even though they've run up a lot. But it's not a good idea for the average guy, unless he's already so sophisticated that he doesn't need to ask for other people's advice.
Outro for Worse Than 1929 to 1946, Doug Casey. As Doug Casey warns, the challenges ahead may surpass those of the Great Depression. The economic, political, and social landscape is facing unprecedented turmoil, with rising debt, unsustainable government spending, and global instability. While he points to gold, silver, and commodities as potential safe havens, he stresses the importance of understanding the volatility and risks involved. Whether you're concerned about preserving wealth or simply trying to navigate these uncertain times, it's crucial to stay informed and prepared. Thank you for watching. Stay vigilant and stay ahead of the curve.